Hello everyone, welcome back to the course on securitization. So today's topic for discussion is the benefits of securitization. So even though the process of securitization may seem to be very complicated, it is a fund enhancement method which can be adopted by many of us. So the securitization process involves the a finance company, and that finance company moves or transfers a pool of assets. Then investor surpluses are channelized into different sources. Also the funds are recycled, and as a whole the economy gets a large number of or numerous benefits from securitization process. And securitization process is much more wider in scope as compared to bill discounting or factoring process. So let's see the securitization benefits. So the benefits of securitization is broadly classified into two, that is the benefits received by the originator or the financial institution and the benefits received by the investor. So we will discuss in this video about the benefits that is gained by both the originator and investor. To start our discussion, first we will go through the benefits to the originator through securitization process. Okay, so the first benefit gained by the originator is the liquid portfolio. So liquid portfolio means in securitization process the loans and the receivables, that is the illiquid assets, are converted into liquid form. So as a result, the balance sheet item or the balance sheet asset is removed from the originator. Okay, that means the balance sheet, the assets in the balance sheet are shifted in the process of securitization. So first it converts the illiquid assets to a liquid portfolio, and that helps in easy recovering of funds. So the particular financial institution or the originator has a relief that there will not be any default in payment of fund or a payment of loan. So the financial institutions can use this method to raise or to churn their loan portfolio and also to set off loans off the books. Also, the banks can use this securitization process to unlock the funds that are tied up in the loans. So they may get more funds so that they can lend more funds in the future. Okay, so this is the concept related to the liquid portfolio benefit of originator. Okay, the second benefit to the originator is better balance sheet management. So as already pointed out, once these illiquid assets are converted into liquid form or the loans and receivables are converted into liquid form, these assets are moved from or they are removed from the balance sheet of the particular financial institution or bank. So it is very easy to satisfy the capital adequacy norms because the assets that carried 100% risk have now been transferred, or the risk is now transferred to the special purpose vehicle, and the special purpose vehicle or the SPV will take care of those particular assets. Okay, so these securitized instruments, um, last time we saw the securitized instruments or securities or instruments like payback, payback certificates and pay through certificates, and these securities or these instruments helps in improving the quality of the capital, and also it helps in higher volume of lending. Okay, so that is the second benefit, that is the better balance sheet management. The third benefit is a restructuring of the asset side. So what is it mean? That is, what do you mean by the restructuring of the asset side from the point of view of the originator? So, for the large number of financial intermediaries, the maturity profile of the assets exceeds that of liabilities. So, when profile of assets exceeds that of liabilities, there occurs or there arises a cash flow problem. So, this securitization is an efficient and is a flexible option to help the lending institution to restrict its exposure to a particular sector. So, securitization of these receivables or loans help the lending institution to restrict its exposure to a particular sector. Okay, so that means there is a creation of customized securities. The customized securities can be created there, and that customization helps in the matching of the tenure of liabilities and assets. Okay, so thus it helps in the restructuring of the asset side. Okay, remember the maturity profile of when maturity profile of assets exceeds that of liabilities, it creates a cash flow problem. So securitization process or securitization of the receivables and loans restrict the exposure of such institutions or such banks to a particular industrial sector. Okay, and that helps the creation of customized securities where there is a match between the tenure of liabilities and assets. Okay. Four. Fourth benefit is high credit rating. So, high credit rating means this credit rating is not a binding force for the receivables. It cannot be a binding force for the receivables. So, as a result, it is possible for high quality receivables to obtain high credit rating. Okay, so high quality receivables can obtain high credit rating in this case. And also, the risk is spread over a large number of investors. That means the lower risk levels can transfer the credit risk to the investor, and thus the risk is spread over a large number of investors. So the fourth benefit is higher credit rating to the originator or the financial institution or bank. Okay. Now we have the fifth benefit, that is a lower cost of borrowing. So for an originator, this is a lower, there arises a very less cost of borrowing in case of securitization. So it helps securitization process helps to reduce the total cost of financing. Okay, since these assets are transferred to a separate entity or a separate bankruptcy resistant entity, okay, or an SPV, then in that case the cost of borrowing or the total cost of financing is reduced to the minimum. So to that extent, the financial institutions do not maintain a capital to maintain their capital adequacy norms. Okay, so I hope you know about the capital adequacy norms taken by the banks or any financial institutions. So this securitization process helps the banks or the financial institutions to not maintain any capital as in capital adequacy norms. Also, the entities with a riskier credit profile can benefit from this lower cost of borrowing. So the fifth benefit is lower cost of borrowing to the originators. Okay. It is because the assets are transferred to a separate entity which looks after the bankruptcy resistance. Okay. And now we have the last benefit which is gained by the originator through securitization process, which is diversified fund sources. So as the name suggests, the originator's asset are sold to a particular person, normally known as a special purpose vehicle, and this special purpose vehicle may divide this pool of assets or packaged assets into individual securities, and they issue securities to the investors, and these are diversified in nature. Okay, so through this process of securitizing the receivables, the instruments that could be sold to the global investors, So securitizing its receivables and the instruments are sold to the global investors. So in that manner, or through this way, the originator has an opportunity to diversify their fund. So that is the benefit of diversified fund resources. Sources. So these are the benefits gained by a particular originator or financial institution through the process of securitization. Okay. So now we will discuss about the benefits to the investor through securitization process. The first benefit is customization. As we have already pointed out, the investor gets or the investor receives a wide variety of diversified securities to invest. Okay, so the securitized paper or the especially the mortgage backed securities, these all suit the investor preferences, so they can choose according to their preference. Okay, so this type of facility is naturally fit for investors who look for a long term horizon. For example, the pension funds, insurance companies, etc., this securitization process is very suitable. So the investors um, who are pensioners, they can go for securitization process. Okay, since they look for a long term horizon. Okay, so that is customization benefit. So we have diversification of risk. So here in this case, the investors can bear the credit risk, but the debt the particular debt product is attached to definite assets. Okay, so the pooling and packaging of cash flows diversifies risk. So the money is divided into different portfolio like things. So the risk is normally the risk is normally diversified. Okay, then the investors can buy a portfolio of assets or receivables. So that the so when the investors buy or investors invest in a portfolio of assets or receivables, they need not fear about a risk of default or a risk of losing their money or investment. Okay, the risk is reduced to the minimum in case of diversification of risk. Then we have the last benefit to the investor, that is a new asset class. So, securitized products provide new investment avenues to the investors, so that through these new investment avenues they can enhance their return as well as they can diversify their portfolio. So the new asset class enables the investors to diversify their portfolio as well as to enhance their return through new investment avenues. Okay, so these are some important benefits of securitization to the originator as well as to the investor. So, as a conclusion, we can say that securitization has a rank much higher than that of bill discounting or factoring, because bill discounting involves a lengthy documentation, and in case of factoring it serves only short term and medium term needs. So considering that, securitization gives a lot of benefits to the investors and to the originators as well. So I hope you are clear about the idea or concept behind the benefits of securitization, which is very, very simple to understand if you're clear with the concept of securitization. So go through the video, listen to the video, and learn more. Thank you.